Hello and good morning, listeners. Welcome back to Almus Market Mornings, your morning brew of global financial update with Jayaram Krishnamurthy. Now, folks, we've had the opening yesterday after a long weekend, and some buying pressure was observed in USDINR. But at the same time, there were also several reports of blasts in the Qatar region, which can, sign or give signals of re-escalation in the Middle East tensions. At the same time, we have also received on the trade front, tweets from Mr. Donald J. Trump or the President Donald J. Trump of reinitiating or the beginning of the negotiations again between US and America. So, JK, what's your take on such updates and what are you seeing in the markets now?
Good morning, Shikhar. Yes. So we had another failed attempt to come below 88 for the USDINR and very strong demand once again. And amid the uncertainties about trade and tariff. So again, we went almost up to 88.20 before slightly easing. So it's very clear, the market doesn't still believe that USDINR can come down. It is erring on the long side of the dollar, and importers are more active. Exporters are holding back despite the fact that we are actually seeing some premiums also on the higher side. Yes, there is, slightly good news from the US side with Trump saying that I look forward to speaking with my very good friend Prime Minister Modi in the coming weeks. There will be no difficulty in coming to a successful conclusion for both of our great partners, great countries rather. Yes, it's a good one, but then, at the same time, also saw some news saying that he wants Europe to impose severe sanctions on Russia, and similarly, the US will also impose similar. So, what the implications of these additional sanctions on Russia for India will also have to be seen. So that's why market is cautiously reacting. We are not seeing major move in the USDNR in the offshore market nor in the stock futures. So we should still contend with 87.75, 87.80 to 88.30 range for the USDNR until we get some solid news of improvement or some relief for the Indian exports to the US. So nothing much there. Of course, we also look forward to the Indian CPI data tomorrow, and slightly inching up is what we are expecting towards 2.2%. And 1.55 was the 9-year low that was seen last month. Not much implication for the policy, of course, but it will be of interest whether we are turning around on the CPI, which has been falling quite a bit. On the global side, the market was looking forward to the preliminary estimate of benchmark payroll revisions. Actually, it was a staggering number of 9,11,000, reduced from the payrolls number that was announced from April till March 2025. This makes the monthly jobs 76,000 lesser compared to 1,47,000 that was being calculated earlier. However, let's also remember that last year also there was an estimate of 8,18,000 fewer jobs than previously estimated. However, this is only a preliminary, revision, and there will be a final revision. It could be higher or lower. That is why there's no major reaction. The market was prepared for a downward revision. That's the reason why we're seeing no major, fall in the dollar after this revision. And in fact, the dollar has strengthened a bit after, in the New York session and continued into Asia as also. I'm putting it down to some profit taking ahead of the FOMC meeting. Euro has come off about 0.6%. Then even gold has seen some profit taking. Gold in terms of Indian rupee was almost touching 1,10,000 yesterday, and that's a good number where the longs could be taking profit, because not long ago, less than a month ago, we were at 96,000 in INR terms for the gold, and I think who wouldn't be tempted to take profit? And it doesn't change the trend, but it's just a temporary blip in the prices. On the other news, we also had Chinese consumer prices dropping by 0.4. That's deflation continuing once again in China. So maybe we expect some more stimulus or easing by the Chinese central bank. Not much impact on the Chinese yuan, of course, which continues to trade around 7.12. Um, We will have, of course, the PPI number today from US, which is eagerly look forward to, because there was a big rise of 0.9% last month on the month-on-month, and this month it's probably not going to be that high. Expectation is 4.03 on a month-on-month basis, but the headline number year on year would be around 3.3%. And the ex-food and energy, the core, would be around 3.5%. Yes, PPI is not a very what would say very big influencer on the policy rate, but definitely people do expect if it does sustain higher on the consistent basis, it can lead to prices, higher prices influencing the CPI as well. So that's the only interest from PPI number. We'll be more glued on to the CPI number will be that will be published later in the week, and that will be crucial coming ahead of the Fed meeting as well. Now, interestingly, a federal judge also today blocked Trump's removal of Fed Reserve Governor Lisa Cook. It kind of a setback. Of course, it's only temporary blocking. I think the hearing and the case would continue, but perhaps the a Fed independence being threatened. That's on the topic of interest in the market. That's kind of getting that setback. But it's too early to conclude. There's nothing, no changes in the market expectation that Fed will cut rate by 0.25% in the upcoming meeting. Not 0.5 in my view. So overall, I think dollar remains in this narrow range, ahead of the meeting, and a little bit of profit taking would be seen here and there in some currencies. Interestingly, today, stock markets are continuing to do well, including US, where S&P 500 hit a new all-time high. In Asia, Korea and Taiwan both hit their all-time new high. India remains subdued, but I think if there is solid news on the tariff front, I think I won't be surprised that India also picks up some rally. And just the last bit, yesterday is for a change. FI numbers were positive. Hopefully, that continues to be positive. Thank you.
Okay, JK, that was really good. And yes, folks, we see the stock markets continue to do well in certain regions of the planet, but at the same time, for the Indian markets, we continue to see the consolidation going on. Having said that, we've seen in our domestic currency another attempt at breaking 88, but it was met with good uh, buying interest by the market participants. So, such failed attempts suggest that market participants are still expecting some weakness in the currency to sustain till we get more conclusive updates on the tariff front or the trade front. And at the same time, the ranged and cautious actions by the market participants will continue with added news of additional discussions around the additional sanctions for the Russian trade. On the US macro side, we can see further downward revisions in the job numbers, although it was primarily being anticipated by the market participants, which did not show much of the movement in the currency or any strength or weakness in the currency. But at the same time, conclusive numbers for the same are still awaited. What is strikingly good is the movement for gold, which we've been seeing rallying quite well in the past few days. It almost reached 110,000 in INR terms, which can be a good space for profit taking by the market participants. So we can continue to see what sort of actions are being taken by the market participants. Last but not the least, it is also one of those things which is being tracked by the market participants, the blocking of the removal of one of the governors, Lisa Cook, which can take different shapes, and it can also suggest what sort of strength is being built in the space of Fed governors, whether they are more dovish or are we seeing more of Trump supporting governors coming in. So that's it for today, folks. We shall come back again tomorrow with another round of updates. Thank you so much for joining in.